Hey guys, welcome back to the 3K challenge. This might be my last episode doing this challenge on Robinhood. I may do one more, I'm not entirely sure, but I asked you guys last episode if it would be okay with you if I swapped brokers, and I think most of you actually prefer if I do. So in the near future, I'll almost certainly be changing brokers and swapping over to Aries. I just need something a little bit better than Vlad's dungeon to trade in, and I've been talking to Aries for a few weeks, and frankly, I just believe in what they're building. I'll have access to level 4 options, which makes a huge difference, and I can get away from Robinhood's nonsense risk management features. We can talk more about Aries another time. This video is not sponsored. Today is Monday, May 23rd, and I was greeted this morning with frightening news that monkeypox is spreading across Europe and is starting to show up in the US. Worse still, scientists are having a hard time pinpointing how the infection is spreading and believe it may have mutated to become more infectious or is becoming endemic among animals both domestic and wild. And I really don't want my dog Snoofer giving me monkeypox. We're pretty used to pandemics by now in the US, and I think COVID is pretty much canceled at this point, but if monkeypox has indeed mutated to become more infectious, or if the Illuminati are back at it again with the white vans, then this would be more problematic than COVID. COVID killed a lot of people, but those who survived were not left ugly. Monkeypox causes scarring and lesions, which means you could be left ugly if you survive. I think we would have taken COVID more seriously if surviving an infection left you deformed, because people are generally more concerned about beauty than health. And this means that if monkeypox keeps spreading, people are going to want vaccine. But how do we make money off this? Luckily, I came across DD by user Joe Skunk on Wall Street Bets. Joe Skunk did the legwork for us and concluded that it was unclear which companies would make money from the COVID vaccine, but it is obvious which companies will win with a monkeypox vaccine. According to Mr. Skunk, there are two companies that produce suitable vaccines: Emergent Biosolutions, ticker EBS, and Bavarian Nordic, purchasable as American Depository Receipts, ticker BVNRY. 5 letters is automatically a suspicious ticker, so I like EBS already. But Joe Skunk went further. He found that there are 2 treatment methods available for people who already have monkeypox. Both are produced by a shitty penny stock company called Chimerix. But Chimerix sold rights to this treatment to Emergent Biosolutions shortly before the outbreak. Emergent Biosolutions is therefore in a really good position to benefit financially. I was persuaded by Joe Skunk's convincing DD, and I decided to drop a pile of my free cash into EBS shares. I've got over 1,400 in buying power, and I want to put some of this to work. So let's search for Emergent Biosolutions, ticker EBS. It's trading just under $40 right now. The market hasn't been too kind to EBS over the past year, but it's had one hell of a week on account of this monkey business. According to Joe Skunk, options are pretty inflated in price right now, so I'm just going straight for shares. I'll put $600 on the table and buy 15 shares of EBS at $40. With a market order, I should get a fill pretty much right away. And we're in. Down 10 cents a share already. I'm hoping monkeypox ends up disappearing, but if the epidemiologists are right and they speculate that this virus might have mutated, I might as well make some money off the hysteria. Well, never mind, it's Tuesday, May 24th, and it looks like about 4 hours after I bought shares of EBS, news started dropping that the likely source of the European monkeypox outbreak was gay sex in European nightclubs specifically. That's why it took a week to pinpoint the source of the outbreak. This should not lead to the belief that only gay men can get monkeypox, because that's simply not true. Anyone can get it if you touch someone with open lesions, which just happens to be likely when you're having sex. But with virginity rates increasing and reduced sexual activity becoming the norm, I don't want to hold shares of a company that sells pharmaceuticals to treat a disease currently spreading through gay sex in Europe. Since I'm already a day late on selling the news, EBS has already dropped $6.50 from my buy price and is sitting at about $33.50. This means I'm down close to $100, just like that, 16% gone. I've got to dump shares here since it's already clear that monkeypox is just a filler episode and it's not going to be a pandemic. I'll sell 13 shares and hold 2, just because I know that as long as I hold shares, then the stock won't rise because monkeypox isn't spreading. So I've locked in about $85 of loss, which really sucks, but at least I live to fight another day. I should have known not to take a stock tip from Wall Street Bets. It's kind of counterintuitive. Now with this recovered buying power, I'm going to attempt a radical strategy called buying shares of a good ETF. So let's open up SPHD. This is an S&P 500 dividend ETF. It's trading for about 64.5, and it's one of the few S&P ETFs that's actually up this year. Good hold during a bear market, although it's come off its top a little. I'm going to buy 5 shares for about $230, and I'll look to acquire more with future profit. I was starting to buck the trend of losses before this EBS fiasco, but now I'm right back on the struggle bus. I'm going to need to do some better trading if I'm going to turn this back around. All right, it is 10:53 in the morning on May 31st. And looking at my portfolio today, there's really not a whole lot of movement. The market is whipsawing up and down a little bit. We're still ready for the day, but we're off the lows. Got some stocks performing well, like AMD, and we've got some that aren't performing so well, like EBS and Bug, but that's okay. I've got a lot of buying power here, and I think it's time to get a little bit more aggressive with my trading. So let's check out the technicals on SPY. Looking at the technicals here, I think there's some reason to believe that we're seeing a relief rally, and we've got a little bit more room on this relief rally to run before things start going down again. I don't think we're out of the woods, not by any means. Until we start seeing some good economic data, I think we're still in a little bit of trouble. But these bear markets do have these violent relief rallies. We saw one in March and into April, and now I think we're seeing one again, May into June. So, we bottomed around here so far at about 380s-ish, lower 390s. And then we had this MACD crossover when things started leveling off. So it's showing that buyers are returning to the market and pushing the stock a little bit higher. Now today we're red a little bit, but we're coming off of the lows. I think we've got a little bit of room left until SPY hits 425 again. So I think now is a good time to take on a short-term bullish position. It's not something I'm going to want to hold for the long term because I think we're still going to fall further. We need to break out above 460 before I'd actually say that we are definitely out of the woods. Right now I just don't see that happening. So we're going to take on a short-term bullish trade the relief rally, and then we'll get back on to the bear train when things start cooling off again. So let's go back over to Robinhood, and we're going to trade trusty old SPY. Can't go wrong with SPY. All right, we're going to trade options. I'm going to trade a put credit spread expiring on June 3rd. That's the end of this week. So we'll sell the at the money like usual, and then we'll buy a couple of strikes out of the money. This isn't going to give us quite that double or nothing I'd prefer to have. In fact, it's not really that great of a return overall. 88 max gain versus 112 now max loss. It's not perfect, but I think with the stock continuing to rise over the next couple of days before things start to turn the corner again, I think this is a good opportunity to get in now and get a little bit of money here. So we're going to trade one of these. And I'm going to ask for 89 cents from Robinhood. I'm giving them their little bit of a cut, but I think this will give me a decent chance of getting a fill. So we'll do the put credit spread, and we'll hang on and wait for it. SPY is fighting for that 413 level right now, but I think we're going to break through and go further north over the next couple of days. And with this MACD crossover, it happened a few days ago. This would have been the opportunity to trade it right here, right after we got confirmation on it. But all this is doing is giving us a clearer picture that buyers are returning to the market, at least in the near term. I think we've got some room before we start running into resistance again. So we are going to let this one play out. There we are. We got a fill at 89. And the stock immediately crashed 20 cents. I say crashed. It dipped 20 cents. So let's give that a chance. All right. So we are flat so far. That's okay. All right. We're going to let this run a little bit. We'll see if I'm right that we're in a short-term relief rally. I think we're going to go up a little bit, and then we're going to start tanking again. But I want to play this bump. All right. Let's give it a chance to run. All right, welcome back, ladies and gentlemen. It is Thursday, June 2nd. It's about 12:30 p.m. The market's having a pretty good day today, so that's got me feeling good. I was a little bit concerned yesterday. SPY was dipping down pretty hard through the week. We've kind of whipsawing up and down, but yesterday, June 1st specifically, we dropped down pretty low, back to 407, which was not looking good for my portfolio. And even though we did increase again throughout the day, we had a nasty late afternoon decline, so not much of a power hour yesterday on June 1st. But today, June 2nd, looks like we're off to the races again. So that's making me feel pretty good. I think we've got a little bit more upside before this market rally starts to fade again. So what's looking good right now is my SPY put credit spread. So we are now fully in the money. SPY is hovering just above 413. Now if we look at where I am, I'm at 20% gain. I've got 1 day left to go. Now there is part of me that just wants to take this off and say, hey, I don't want to hold a spread going into expiration day on Robinhood, where I'm at the money. I don't want to hold an at the money spread like that because now I'm at risk of getting closed out early again. And I really don't want that to happen. But where does that leave me? I can't close 20% of this spread. I have to either hold or I have to cut and run and take my $17 gain. Let's see what's going on. Let's look at SPY and see if my opinion has changed about the direction the market's going. So we have pretty good volume. We still have a strong MACD crossover. RSI is above 52. I mean, the technical indicators do indicate that we've got a little bit more upside ahead of us. I think we're going to start reaching some real resistance at about 424, but we have room until then. So this is a really tough spot for me. There is part of me that just wants to close and take a $20 gain, but I'm not going to get anywhere in this portfolio taking $20 gain at a time. I mean, that's just not going to move the needle for me. So I'm going to give it a little more opportunity. I'm going to throw caution to the wind and hold this thing through expiration, or at least into expiration date. Actually, you know what? Fuck that. I'm not going to do that, because as soon as the market opens tomorrow, I'm liable to get closed early, and I don't want to do that. So I'm not going to hold a spread on Robinhood at the money on expiration day. So we're going to close here, and I'm going to roll to a new spread. So let's close at 69, because that's a good lucky number. If I can close at 69, I'll get a $20 gain on this, and that's fine. So let's close now. Let's pay $69 to close. All right, we're placed. And let's start planning the next trade. So I'm hoping that actually closes. It looks like it should. All right, let's look at SPY again, because I've had some luck with SPY. I think we've got a little bit of upside ahead of us still, but not too much. So let's do this. Let's trade SPY options, and let's anticipate opening up a new spread. So let's go, let's do June 17th. That's my friend's birthday, so it's lucky. All right, let's set up our Iron Condor. I think we've got a little bit of upside ahead of us, but I don't think we're going to continue in that direction too much longer. So let's go ahead and enter into let's do a 25. Let's do a $2 wide, 25 delta on the calls. And let's come back down here. I think we're going to have a little bit of decline ahead of us, but the deltas should help us out, giving us some room, some buffer to the downside. Let's say 405. Let's keep going a little bit further. Let's go to let's sell the 400, and then we're going to buy the 398. So with this one, it's about another double or nothing, but with a nice Iron Condor, it's pretty wide, 426 by 400 over 2 weeks. I think that's not too bad. So let's go ahead and open up that one now, and let us pray that we get a close on that spread, because I don't want to have a spread and a Condor open at the same time. All right, we'll split the difference with Robinhood. Our break-evens here are going to be 399 by 426.96. That's pretty good. It's a nice wide break-even. We'll give it a little bit of time to run. We're going to aim to take profits at 50%. I'm feeling pretty good about this so far. All right, we're filled on the Iron Condor. Let's see if we got filled on the other side. Yep, and it looks like we got a fill on the spread too. So that means I took my $20 gain, and we opened up that Iron Condor, so we're in good shape so far. All right, why don't I go ahead and spend 20 bucks on something? What shares do I want? I've got enough ET. I don't want Jets. TQQQ is a little bit out of reach. I don't necessarily want that one right now. All right, we're going to put that $20 aside for now, and we're going to play it we'll play it tomorrow. We'll see what the market does. All right, welcome back, gentlemen. It is Friday, June 3rd. It's about 11 p.m. Obviously, the market is closed right now. But what I want to do is come back and look at the way the stock market ended the week. And was I right or wrong to close my spread when I did? And was I right or wrong to open up the Iron Condor? I'm going to keep my face a little bit further away from the microphone this time, because last time I recorded, you could hear every little mouth sound and breathing sound. And my goal here is not to produce ASMR. If that's what you want, let me know. But that's not what we're looking to do with the 3K challenge. Yesterday, I closed my SPY put credit spread. The strikes were 413 by 411, so I needed SPY to stay above 413 to get my max profit. When I closed the spread at about midday, SPY was trading for a little over 413. I think it might have been 414, and I wasn't sure how much more we were going to go up. But the real driving factor was that I didn't want to hold an at-the-money spread on Robinhood on expiration day, so I did close early and I took a $20 gain. It's a really good thing I did that, because if I did not, it would have been a max loss. Now, Robinhood would have closed me a little bit early, so I might have recovered 20 bucks out of the whole thing, but it would have been at least a $70 loss easily. So I'm really happy with that trade. And of course, with my Iron Condor, by opening up now, we've got a 400 by 426, so that's pretty good. It's nice and wide. I'm up 8% with $8. So we've got some time left on this one, but I think it was the right move after all. Now, if we flip over and look at the technicals, I expected that we were going to start running into resistance between 420, 423, really getting into this 50-day moving average, but that may not be the case. We're running into some resistance a little bit earlier than I expected to, and you can start to see that with the MACD starting to hook back toward the negative territory. We have a long way to go before we actually have a bearish crossover, but the fact that we're not rising like we were anymore shows me that this little relief rally might be coming to an end about $5 earlier than I expected it to. I thought we might get up into the 420s, but I'm not so sure anymore. I'm not quite ready to get full-on bear mode yet, but I think holding the Iron Condor is going to end up working out pretty well for me. So I'm going to hold this a little bit longer and aim for that 50% gain. I'll tell you what, though, most important thing I've learned so far is that I have a newfound respect for traders with small accounts. I mean, I'm used to my Merrill Edge account where if I screw up, I can just deposit more money, no big deal. I can buy more shares of positions that I know are going to increase over the long term. With the 3K challenge account, I'm not depositing more money, so I can't do that. And I can absolutely see how challenging it is to maintain a portfolio when you know that if you lose money, it's gone. If we look at what happened this episode, the May 23rd, I lost about $85 on EBS, Emergent Biosolutions. And as a result of that bad trade, I'm up since I bought the position, I'm up about $110. It could have been more like $200. But losing that money is detrimental to the cause. I still have a lot of cash left. I'm not going to enter any more bearish positions right now, but I've definitely got that on tap. And once we start seeing a MACD crossover again, we're looking at a bearish crossover, or at least when it looks imminent, then it's going to be time for me to go back and start picking up some call credit spreads, maybe a put debit spread here and there. But all in all, I'm going to consider this a successful episode because I did have a couple of good trades. Of course, that EBS one is really killing me, but I'm pretty confident with the Iron Condor. And of course, we've got a lot of room left before I can start saying that I've had a successful year. I think if I keep up the momentum and start adding shares of quality companies instead of a bunch of junk, I think we will get this portfolio back on track.